Hello, this is Erin Swenlin with DecisionPoint.com, bringing you your daily 5. Let's get it started. But before I do want to let you know that at Decision Point, we do have 2 reports that I think you would be interested in particular, the Decision Point Alert, which is going to give you a daily assessment of the markets, give you the trend and condition, and help prepare you every trading day. If you like what I'm covering today, you will love the DP Alert because it has all of the charts that I'm including, plus a number of other ones. Decision Point Diamonds, that's for the trader in you. If you'd like 10 stock and ETF picks per week, that's where you're going to find them. And that will get you a head start. So you have the DP Alert, gives you everything you need to know about the market. You have Decision Point Diamonds, which gives you those stocks that should ride the current trend. All right, let's get it started with the S&P 500, the SPY daily 1-year chart. All right, well, what we're seeing right now is a rising wedge, and that is a bit of a problem for me. These patterns do tell us that this rising trend line right here should be broken soon. Of course, this rally has not been very interested in breaking down, and we are still seeing some weakness within our indicators. I'll show you a few of those, but certainly the rally is relentless. I think everybody's using that now to describe this rally. And I think that we're really set up well to continue higher, but the problem is that there are these little tiny problems under the surface that are bothering us right now. I think what's interesting to note is that right now that the Magnificent Seven, or Spectacular Six, as I've been hearing lately bantied around, they're actually not really leading the market right now. It is the relative strength between the SPY and RSP is a flat line. That means they're both traveling in conjunction with each other. We may be seeing a little bit of a broadening out of this rally based on this. It's certainly a good thing to see other stocks take advantage of what's going on. The PMO is flat and well above the 0 line. This actually is a sign of pure strength. And certainly that is what we've been seeing in this rally moving up. Total volume as of Monday was pretty high there, not quite to blow off levels, but certainly something that could turn into a decline in the near term. Let's look at the Swenlin Trading Oscillators and the intermediate term breadth momentum and volume momentum indicators. These are our primary short-term and intermediate term indicators. And the Swenlin Trading Oscillators have been really twitchy. They haven't been all that helpful, to be perfectly honest. And we are seeing negative divergences here. Notice that the readings currently are not nearly as high as they were at this prior top. And we should see higher numbers. We're at a much higher price point than we were. So this is a bit of a problem. We're not getting kind of the background shove that I like to see from these indicators. The ITBM and ITVM, on the other hand, have been making their way up slowly. And this tells me that really whatever decline we're going to endure, it's probably not going to bleed into the intermediate term. Now, if these indicators do turn down, that's going to set up a negative divergence as well for these. And honestly, they are in a negative divergence currently. We just don't have tops on these indicators to seal in the negative divergence, if you will. So at this point, Swenlin Trading Oscillators as of Monday night were rising, so that's a good sign. Does tell us that we could see some more upside coming out of here. And the intermediate term breadth momentum, volume momentum are looking very positive. Let's look at the Golden Cross and Silver Cross Index. This is our bias chart. This is where we determine the intermediate term and the long-term bias of the market. And we do that a few ways here. First, we look at participation. How many stocks are above their 20-day EMA? How many are above their 50? And how many are above their 200-day EMA? This gives us a really good sense of the broader market in general. Now, granted, the S&P 500 is made up of large caps, but certainly the mega caps have been taking the spotlight, but they're now starting to cool a bit, and we're seeing broader participation. These numbers, while not as high as they should be given the price rise in advance that we have seen, they are still robust. They are still enough to keep things together. So intermediate term, long term looking much better. Now, intermediate term, we do have listed an intermediate term bias that is bearish. And the reason we have that is because the Silver Cross Index is below its signal line. Before I get too far into the Silver Cross and Golden Cross Index, I probably should tell you what they are. The Golden Cross is a 50, 200-day moving average crossover, a golden cross. Most people are familiar with that. Well, what we did is we said, okay, let's look at how many stocks within an index or group hold a golden cross. And let's count that up. And that's exactly what we have with the Golden Cross Index. Currently, it is rising. This is good for the long term. We should still see higher readings than we have previously, but we're at least keeping things above the signal line. Now, the Silver Cross Index, we consider a Silver Cross a 20, 50-day EMA positive crossover. So what we wanted to do was see how many stocks within the index have a silver cross or have a 20-day above their 50-day. That implies that they have an intermediate term bullish bias. So that's what we want to see. Currently, it's below its signal line, so we have to read the intermediate term bias as bearish. But do note that the Silver Cross is trying to get back above its signal line, and that would give us an intermediate term bias of bullish again. So a lot of good things going on under the surface. I keep looking and getting out that magnifying glass to find negatives, but it's really hard to do so. The biggest negatives that we have right now are these negative divergences, and that is what bothers me more than anything. It's the one thing that keeps in the back of my mind when I look at this rally that just keeps going up. There are still intrinsic problems, and we need to be aware of those. But in general, robust readings, nice looking silver cross getting ready to cross above its signal line. Now let's get into all that glitters, which is gold and Bitcoin right now. These two asset classes are just on fire right now. And I guess the big question is, how much longer can this persist? Well, let's look at the gold weekly chart to give us a little bit of an idea. First of all, what's been going on? Well, we've tried 1, 2, 3, 4 times to close at all-time highs. We finally managed to do that, and now it looks like this pattern is going to be left in the dust, this particular trading range, and off we go into the sky. We don't see much to tell us that gold is not going to continue to rise. This weekly PMO looks fantastic, turning up right above that signal line like that. I think we did get the negative crossover, but this whipsaw is a really good sign to see on the PMO. And right now, discounts on the physical gold trust, what we do is we take the closed-ended fund, which is a PYHS, the physical gold trust. It's closed-ended. So when people buy into it, they're getting the gold that they hold either at a discount or at a premium. And currently what they're paying is a discount. And when these discounts get very, very large, a lot of times that's when you're going to start to see a move to the upside. You can see back here It didn't work much. It did get us a little bit of upside, not as much as I would have liked to have seen. You can see back here, it came at that bottom, back here, this bottom, back here, this bottom. So you can see that it's very, it does tell us a lot about what's going on. If there's a lot of discounts, that means that investors are very bearish on gold. And when you have very bearish investment or very bearish investors, that's when you see the discounts get high. So people have been very bearish on gold for quite a while. These readings over here are still much higher than what we saw back here. So it's very interesting to see how investors are feeling about gold. Sentiment is contrarian, so you really do want investors to be very bearish on the metal. And when they do get very bearish, like I said, that's usually when we see those upside moves. That is what I see right now, getting ready to push gold even higher. RSI tells us that gold is not overbought yet. So there's certainly much more room for gold to move higher, and that is what we are looking for here at DecisionPoint. Bitcoin is the other one, off to the races. This is the most recent Bitcoin chart that I had. I pulled it just this morning. And you can see that Bitcoin has really been making a move since those new ETFs were released. And, you know, we got the big rally back here, and that was in anticipation of those ETFs being released. And then we finally saw those ETFs released, and now we're starting to get a big push to the upside. We had a bull flag right here. You can see that another flagpole is developing. Looks like we're getting a bit of a pullback today on Bitcoin, but ultimately, I see Bitcoin moving higher. This looks like another flagpole. I'm expecting a little bit of consolidation at that point and another move up. We could see some trouble right now because we are at the all-time highs for Bitcoin. So when you get close to those all-time highs, a lot of times there's going to be a little bit of hesitation before you get the bust to the upside. But that is exactly what I'm looking for. At this point, Bitcoin is very overbought. But as I often say, overbought conditions don't generally bother Bitcoin. You can see back here where the RSI was overbought for a very long period of time. And really what happened was Bitcoin just continued higher. So I'm not overly worried about these overbought RSI readings. The PMO looks pretty good and is rising. It tells me that we should see more upside on Bitcoin. Stochastics really oscillating above 80, which is another sign of internal strength. So we're seeing a bit of a decline right now in Bitcoin, but I'm expecting it to continue higher and break some records here. All right, that's all I have for your Daily 5. I do welcome you to come to my website, decisionpoint.com. We also have a YouTube channel now that we would love for you to subscribe to. We put our free Decision Point trading room videos up all the time there. Just go to @decisionpoint.com, and that would be the YouTube channel to find us. Thank you for watching, and I'll see you next time on your Daily 5.